Welcome back, everyone, to Vox Markets. My name is Paul Hill, and by popular demand, I am delighted to be able to speak to Andy Brough of Schroders again, one of the most accomplished small and mid-cap investors in the UK. So welcome, Andy.
Yeah, welcome.
When we last spoke at the beginning of November, you were bullish on stocks, and I think Spurs were top of the Premiership. And then 2 hours later, we got blockbuster vaccine news from Pfizer and BioNTech. So given that sort of backdrop and the Bank of England predicting a rip-roaring second half, what's your view, sort of top level, on small and mid caps going forward?
Well, it's just a shame that all the Spurs players weren't vaccinated immediately, because they might have prolonged their life at the top of the league, as well as prolonging the life of the people who've been getting the vaccine.
You gave them a kiss of death, didn't you, last time? Because I think they've sort of gone south since then.
Yeah, I think when you look at it now, okay, and I've just been writing the quarterly report for one of my clients, and their fund was up sort of 95% over 12 months. And you kind of look at it, and some of the moves are just off the clock. Yeah. You know, Halford's plus 444%. These are the ones that I don't hold. AO World 300% or whatever. Yeah. And so, you know, you look at it, and so those that benefited from the pandemic had a great time. And then towards the end of the period, all those that people suddenly thought about the reopening trade, oh my God, you know, this is going to be huge as well. And so we've seen massive moves in Restaurant Group, Marston's, and the travel companies. And my personal view, I think a lot of stocks have just gone too far too quickly, in that it doesn't matter if you've raised loads of money. People just say, you know, you're going to be fantastic. You know, the Hut Group, for example, give the guy who runs it 20% more equity. Yeah. Well, you know, you've got to run pretty hard to cover that earnings and then grow it from there. Yeah. You know, the trick with shares is not to issue them. Yeah, the trick is to increase the earnings over the base of shares you've got.
Yeah, I think overall in the market, we've probably got sort of far too much liquidity in the sort of the broad sort of like, you know, in the US and in the UK and across sort of the rest of Europe. And that's brought forward gains going forward. So we might not see them quite as well,
it's quite interesting. You know, on liquidity, you know, someone sent me a chart yesterday of margin debt in the US.
Yeah, it's rocketed.
And it's doubled. It's over 12 months, it's doubled. But, you know, it's $400 billion. I mean, 1 billion, 2 billion. I mean, sooner or later you're talking real money, aren't you? But you know, you look at these things and you think, well, where's that all going? And like my kids' friends go, oh yeah, I'm really interested in stocks and shares. Yes. You know, I bought these shares, but I only bought £1,000 worth. It's not much money. And I always say to them, you know, I said, okay, I'll tell you what we'll do. Let's go to the cash point and let's get £1,000 out. And let's give it to the first person we see, and then apologise for the fact that it's not much money. You know, you've got to treat whatever stake you've got to treat it like it's a gold bar. It's like Alf Ramsey in the '96 World Cup final. Boys, you're going out there, treat the football like a gold bar. Do not give it away. Yeah. And it's the same with investing. You invest obviously to make money, but you don't invest to give it away. You know, I was down in Cornwall, and a couple of my mates said, "Oh, I bought some because I'm down here now. I'm retired down here. I bought some shares in Cornish mining." I said, "Why? Is that to show willing? I mean, what is going on here? Do you think you're going to make money?"
Yeah, you know. I don't think it's a coincidence that a lot of the furlough money and also the stimulus checks in the States have landed in Robin Hood accounts, and therefore have been leveraged up and created a whole lot of margin debts. But I think what it is going forward, there'll be a lot of stock picking. And I just look, I mean, you mentioned a couple of those stocks which have done really well since the sort of the lockdown, but you've had some pretty good home runs yourself. Yeah. I mean, just to go through a couple of them, just to see, I mean, how you want to, how you're playing them. So like, do you continue running the winners, or because I mean, effectively you've got AFC Energy, which has done brilliantly, Argo Blockchain and Illica likewise. They may have come off their highs, but frankly, you've made triple-digit gains on those guys. I'm sure.
Unfortunately, Argo Blockchain, I sold about 40p. This is the danger of taking your phone on a golf course. You know, I'm standing on the 11th, and a fellow mate texts me and goes, "Broughy, they're up 94%."
What, in the day?
On the day. So my drive then enters the woods, stage left. and then all I can think about is bloody Argo Blockchain for the rest of the round. I come into the office that next day, and start selling them. Now, if I hadn't taken my phone, I wouldn't have known. And so we're out of Argo Blockchain. I mean, I did always worry about a business model that after you found them all, Bitcoins, what is your business model, right? AFC Energy and Infinity Energy to a degree, we've got a foothold in these sort of stocks. AFC we refinanced many times, and it's probably in trading terms been one of our most successful companies actually buying and selling.
ABB, I mean, they effectively, I think AFC Energy, they do mobile hydrogen power generators off grid. And they just had a whole big financing, didn't they? On Friday, they announced it alongside with ABB, the big sort of like industrial, which just says the technology is excellent. Yeah,
well, you hope so, but then you don't know. What we're not privy to is the ABB or any of these ones, for Sirius or ITM, what the thought process is of the people who are buying the shares on an industrial perspective. Like the fund managers just saying, you know what, I'll have a few here, a few there, just in case. But there's no doubt, the narrative in terms of green drive is increasing, and the move away from sort of oil is only going to pick up. And so some of these hydrogen stocks, I mean, we do trade them because on the basis that actually some of these market caps get quite high, and you're asking a lot. I mean, I sold ITM too early, but them and Sirius are like sort of £2 billion companies, or still £2 billion. That is quite a big chunky mid-cap stock.
Well, you never go broke taking a profit, do you? And if you're sort of like a value GARP investor, then you can redeploy the funds into other opportunities, I guess. So, and on an exact theme, when we come to some recent new positions, I saw you picked up a very interesting stock that I've been following, Circassia. Now they do, I think, basically diagnostics for asthma and other respiratory illnesses, and they've been whacked during the lockdown because obviously they haven't been able to do, like the rest of the world, normal, typical testing of people's conditions. But I'm guessing you've seen a light at the end of the tunnel.
Well, Circassia is quite interesting, isn't it? Because when it floated, it was obviously a Neil Woodford-backed company, and I think it floated about 360p, and it was all about sort of cat allergies, wasn't it? People cat dust or cat hair or whatever.
Yeah.
And then of course that trial failed.
Yes.
And meanwhile, they signed a deal for guaranteed royalties to, I think, AstraZeneca for 120 million, which was going to cripple the company.
Yes.
And they sort of had a sort of Alexander the Great Gordian knot moment where they cut the ties with AstraZeneca, got out of the liability, and now they're reinventing themselves. And it's very interesting in shareholder list terms. When I see people like Christopher Mills turn up in anything pharmaceutical related, then I immediately get on the phone. I'll never forget, I was sitting at home one night, and in the evening, I kind of flicked through the late RNSs from about 4 o'clock. Sad person that I am. And I saw that Quantum Pharma had just had a funding at 50p, and Mills was a shareholder. So I got straight on the phone to Zeus and said, right, I want in on this trade, and if you get me in, then I'll buy some share. I'll remain as continue to be a large shareholder or increase it. And I got in on the placing and bought a load more shares at 50p. And then Chris Mills engineered the sell of that to Clinigen at just over £1, wasn't it? So in certain sectors, I will follow him.
Yeah, I mean, I think with Circassia, what was really been interesting, with their recent results or their trading updates, they had the exec chairman, the CFO, and the COO all buying as well at about 29p. So that says a lot, and I think the shares are trading at around about 30. So again, I'll point investors to have a look at that one because it's definitely got some very good technology.
Yeah, and I think it's the only sort of pharmaceutical related stock that hasn't come out with either a cure or a test for COVID. So I quite like that.
Yeah, okay. And then two others you've recently bought, and only just found out, was one ActiveOps, which is basically a management process automation sort of SaaS platform for digitizing financial companies' back offices, and also Chemring, which does sort of like countermeasures and flares, and also I think they do ejector seat propellants as well. So you've got a good defense business with a real sort of like top-notch software company.
Well, Chemring has been through the mill. You know,
Yes.
they had that explosion at the factory, which tragically killed a couple of people.
Yeah.
And it happened in America, which obviously, being a slightly litigious society, is not the best place to do those sort of things. So it's not good to do them anywhere.
Yeah.
New management have come in, and before this, Chemring was quite a success story. You know, long term. But the really interesting thing with Chemring is that it's one of the divisions called Roke, which is cyber security. You know, a big success for us has been NCC Group.
Yes.
Under the new management.
Yeah.
Adam, you know, when I first met him, I thought, mate, really? But he's been absolutely fantastic.
Yeah.
Got that company positioned, and the shares have been on fire into the 250. Roke inside Chemring is worth an awful lot of money. Whether they spin it out at some point or they build on it, but cybersecurity, you know, you just have to look at it, read the papers.
Is
it's
it
only increasing.
Cybersecurity or is it cyber warfare?
Well, it's both. You know, you need the security to go to war.
Well, yeah. Is it cyber defense or offense? I guess, but it's probably a bit of both.
It is. It's a bit like American football. You know, you have them on the pitch at different times.
Oh, okay.
And the other one, ActiveOps. Now, Investec are my house of choice when they're floating companies. When you get a float from Investec with only them on it, you know, Fevertree, FDM, Blue Prism, and ActiveOps. You know, and what I like about ActiveOps is the fact that all the growth's been organic, and also that the accounting is very clean in that they don't capitalize the R&D software. It's all written off. You know, right. Management. Yeah, you know,
that's pretty unique.
Well, you know, people always say, "Oh, the auditors made me capitalize it." Really? You know, you take Craneware. You know, Craneware never used to capitalize much, and then thought, "Oh God, we're not making enough money." And if you look at their numbers, then capitalized software goes up every year.
Yeah.
So I always ask you, what is the difference between how much you're capitalizing and how much you're amortizing?
Yeah.
And when do you think they're going to get into balance? Now, you know, if they're in balance and you capitalize 5 and you write off 5, that's not a problem. You're not distorting the P&L. Yeah. But if you're capitalizing 5 and you're writing off 2, well, actually that's a 3 million benefit, isn't it?
Yeah. Yeah. I mean, I think also ActiveOps is going to benefit by that whole automation and digitization of back office, sort of like corporates, isn't it? And they've done the front office because they've had to during COVID, but actually the back office is really sort of taken off, and I think you're seeing that coming through the you know, other people. So that's a good one. And then you bought, I think it was infrastructure and some house builders. You've got MJ Gleeson, another one from Chris Mills, I understand. You've got Speedy Hire, which is the CEO of Russell Down, who actually he did a good job as Hyder. And then you've got Vistry, you've got Rockstar CEO Greg Fitzgerald. So you've got a nice balance there, again, into sort of construction in the UK, you know, infrastructure boom.
It's quite interesting, Speedy Hire. You know, so Russell went in there. And one of the first
things finance director, actually, didn't he, originally?
Yeah. And then he became CEO. One of the first things he did was he actually decided to get a consultant in to analyze the transactions over each branch for the last 5 years. So he could say, right, okay, this is the level of stock that you actually need. And he said, because you go up to these branch managers and they go, right, well, we've got this special bit of kit, but we better have 2 just in case John comes in. Yeah. And they go, well, look, John's been in 3 times in the last 5 years, right? So you don't need to actually tie that up in working capital.
Yeah.
So all the things that most companies would take for granted, he bought to Speedy Hire. So as a result, he's managed to enable people to. So if you order before 12, you get it before 3, don't you? I think it's Speedy Hire
in London. Yeah,
in London. Yeah. And so this, because he knows from the data how much stock he needs at each branch, rather than going, you know what, it's sunny outside. I think people might be doing a bit more building work. Yeah, we better double up. Yeah. Right. And so, and that's made a massive difference. They did block their copybook slightly on that acquisition, which went wrong for government training. But you know, everyone makes mistakes. On the other 2, MJ Gleeson, you know,
Northeast builder, aren't they? Affordable homes.
It's everything north of the line, you know, from the wash, upwards on a diagonal. So basically, this company was a family company, and it was Dermot Gleeson used to come in and see me, and I say, Dermot, you know, what are you doing in construction? I said, you're building this bus garage in North Finchley, and you know, it just looks to me every time I cycle past it, it looks a disaster zone. Yeah. And I won't do an Irish accent too, because I'll probably insult most of your listeners. Anyway, and what happened was construction did turn out to be an absolute nightmare.
Yeah,
nearly dragged the company under. Yeah, Mills turned up and put this guy in charge, whose name's just gone out of my head, Jocelyn, as CEO, who again, a bit like Russell at Speedy, absolutely forensic attention to detail. You know, how big is the kitchen cabinet, etc. Where you're buying it from, and he's transformed Gleeson. So he's gone now, unfortunately, over a bit of a dispute over remuneration. But it's going to be interesting to see how that develops from here. And Vistry, I mean, Greg Fitzgerald, really, I have to take some depressing pills before I get on the phone to that man, because you know what? Otherwise, I'm going to be in that happy clappy, my God, I've just got to buy as many as I possibly can. You know?
The shares are still cheap. I mean, the house builder, and when we last talked about house builders, were on about 1.1 sort of book value. And they've actually, the mid sort of house builders on average have moved to about 1.7 times book. But interestingly for investors, if you still want to get into that sort of investment, Vistry is still only on about 1.2, 1.3 times book. And this guy is, I mean, he came in, hasn't he? And he basically was called Bovis originally, then bought, I think it was Linden Homes, jammed them together, created a shed load of synergies. And frankly, I think at the last statement, he says he's going gangbuster.
Yeah, I mean, the problem that Bovis Homes was that they put an accountant in charge. Right, they put an accountant as CEO, and 6 of the 8 regional managers.
Are you an accountant, Andy?
Yeah, but I'll come on to that in a minute. And if you see my DIY skills at home, you know why I'm not a builder.
Yeah,
right?
Okay.
Anyway, so I should have told the chairman that, mate. Listen, I tried to build a house, but as an accountant, and so everything was done by numbers. Now, Tony Pitchley used to turn up in his Range Rover, you know, God rest his soul, and he'd say to the site manager, right, okay, have you got your notebook? And the guy would go, well, why do I need that? And he said, because I'm going to go around this site with you and tell you exactly where everything's going wrong, and you're going to sort it out. And that is the difference between a builder and an accountant. So Tony Pitchley and Greg Fitzgerald, you know, Greg is that sort of person, go around, energize people, say, right, we need to do this, we need to do that, you know, simplify things. The same thing, the guy who's gone into Crest, which is, you know, Crest being a disaster, is just like that. And he said, hold on, why are we building all these different styles of homes? You know, because people go, you know what, this is my site, I'm going to order that marble from Italy, because, you know, I've always fancied that, you know, and I'm sure that's going to be really attractive. And then you've got all these different, you know, there's all the economies of scale. This guy's come in and said, hold on a minute, why don't we go back to simplified models, a bit like Vistry, and I think both of those two out of them look quite interesting. And you're starting to see, aren't you? There was a private equity bid, wasn't there? The old guy from Persimmon, who's obviously doesn't know what to do with his 75 million quid.
Oh, that guy, is it? Yeah.
Okay, has teamed up with a private equity firm to buy out a large private house builder. You know, in the cycle, McCarthy and Stone always goes first and then returns to the market first. That's gone. You know, Crest is normally next. And then let's see what happens.
And I think the market, I mean, basically at the moment, it's difficult to say, isn't it? But I mean, it's absolutely doing brilliantly. It's flying and stuff like that. The only sort of like slight sort of like potential fly in the ointment is once they've actually done the stamp duty holiday ends in June, has that brought forward some demand? And my view is that it might soften off over in the summer, but I think again it's going to go well in 2022 because you've still got 95% mortgages with the government guarantee, and you've got, you know, sort of like people they've got plenty of savings.
Well, if you can, at the moment, people are paying more in rent than interest. So with that dynamic, that kind of tells you that, you know, there's a lot of pent up demand.
And then moving on the portfolio again, we've got some sort of like the new sort of like normal after the pandemic is sort of once we've reopened and sort of like sort of vaccination. We've got stocks which have done well in the portfolio, but actually have probably got some good runway. Tremor International. Now this one's been an absolute blockbuster winner I think for Schroders. It does sort of programmatic video sort of advertising.
I think so. Yeah, no. So Tremor is
Tremor, is it? Right. Okay.
Yeah. And you would not believe the pronunciations. I've had Tremor.
Yeah, okay, yeah.
But anyway,
I prefer Tremor rather than Tremor. It's a bit worrying.
It's Tremor. So Tremor. Let's just look at Tremor. So Tremor used to be called Taptica.
Yes.
And Taptica then merged with Rhythm One, which used to be called Blinks.
Right.
So this is like a yesteryear of failed attempts in the media industry, right? In the advertising industry. And I remember going to the Tremor, if you want, AGM, when the shares were like 90p.
Yeah.
And they'd fallen from like £1.50.
Yeah.
And someone in the audience asked the chairman a question saying, what is going on with the share price, blah, blah, blah. And Tim Weller said, well, look, it's only a loss if you sell. The shares will recover. Yeah. And he said, listen, mate, I was taking my ill mum to hospital and the share price collapsed. And unfortunately, I couldn't get a mobile signal. So I was stopped out of my account. So yes, I have lost money. Anyway, so Tim Weller points to me and said, look, it's our largest shareholder there. Andy Brough, why don't you go and ask him? And so I was, thanks, Tim. Anyway, so I was then surrounded at this bloody AGM. And they said, so why are you so confident? And I said, well, look, what you need in sort of media or tech land is you need a platform. And I'll use the example of Cambridge Silicon Radio, who, had, everyone went, oh, cameras, it's all over. And it wasn't, they sold that business for $300 million, but they had a platform for the rest of it, which then someone came to bid for. And I said, this company's been through all these iterations of, print media, mobile media, and now it's actually got a platform in this connected TV where it's linking the advertisers and the content together. And it's managed to put down some really deep roots. And so even though they're in a fast flowing stream, they're going to hang on and they're really going to grow. And I thought to myself, I did sound a bit like Chancey the gardener from being there, in the summer, the flowers were bloom or whatever. Anyway, so, and that's what's happened.
They're £7 now, aren't they?
They did. They're £7. They were £2 in November. They did a deal with News International where they bought a thing called Unruly, which gave them a load of content. And that's what one thing leads to another. Content leads to advertisers. Advertisers lead to content. And so if you look at last year, I think they made about 100 million EBITDA. Of which 40 was in December. Yeah. Right. Or 80 of it was in the half year. 100 might be too high. But you look at it and you go, hold on, the broker's forecasting 105 million. I think he could be too low. And they just announced they're going to NASDAQ. I mean, I got an email last night from our American office saying, from their media analyst saying, Andy, we've got a meeting with Tremor. And can I speak to the analyst in the UK? And I said, yeah, luckily enough, that's me. And,
yeah, I mean, I look at their last trading update, and in Q1, their net revenues were up 70 to 80%. I mean, unbelievable year on year. I mean, the only thing I would say, I mean, I don't know that much about it. When Google with their Chrome decide to actually ban third-party cookies for tracking across the internet, likewise with Apple with its mobile, given that they sort of like consume lots and lots of sort of like video on the mobile devices and online, is that going to impact them at all on programmatic, or is it because they've got the content they don't need to have their first sort of like cookie capture?
It is one of those industries because in the past these exchanges had these things called bots, so people were measuring the number of hits they got. But they were fake bots, and they brought the whole industry into disrepute. So to clean all that up, Google et al. Are always a threat. I can't sit here and say, look, all I know is that actually, if you get to NASDAQ, you look at the multiple of Tremor compared to the Trade Desk, Magnite, and the other one that begins with P, escape my memory. And you go, well, actually, this thing could be 100% or 50% still cheap. Now, the fact they're getting a listing in America, and the fact my American team are phoning me up, kind of tells me that actually this could be interesting for them.
Yeah. Another sort of like ones which have been sort of like home runs, or should we say, you know, during the lockdown, is CMC Markets and USL Technology and Tribal. They're all sort of like software firms that frankly have still got huge runways ahead. So I think
it's interesting. You know, CMC floated at £2.40 a share. Shortly afterwards, had a profit warning and bottomed out about, I don't know, 80p.
Yeah.
So we've been buying it. You know, I spent a lot of time with Peter Schroders. And
he's quite a controversial character, isn't he, or something?
He is, yeah.
Supposedly. I mean, I've never met the guy.
But, you know, because he got tied up with Dodgy Dave. That's Mr. Cameron, for those who don't know. Because
who's Dodgy Dave?
And so he was doing it. He got involved with the Sunday Times, some expose.
Yeah, okay.
Selling access to Cameron, which was all disproved or whatever. So, and he's actually, CMC is really a software company. You know, although it benefits from CFD trading, you know, they didn't have all the problems that IG Index had, you know, closing accounts, and they're white labeling their product. And again, like with Tremor, and you're seeing consistent profit upgrades, aren't you?
Yeah, you are. I mean, again, the only thing I think with CMC is how long is the good news going to last? Is the Robin Hood trade? I mean, we talked about sort of like everybody getting these stimulus checks and dumping them into stockbrokers' accounts and playing the markets. All you need is a blow up in say Bitcoin or into some sort of a high value stuff. Then these guys could sort of like go.
Yeah, well, they don't trade. They don't trade cryptos.
Oh, they don't trade cryptos. Well, that'll change. I'm sure they will. Unless Peter doesn't like it, I don't know.
You can't hedge it. You can't hedge it.
Yeah, I suppose you can't, can you? But hey, well, I suppose they just act as a intermediary. I don't know. What about sort of prop tech, the USL Technology? I mean, those guys obviously play on the housing market again. They seem to be launching a big digital end-to-end service that takes all the pain out of buying a house, which is great news for everybody.
It's quite interesting now. I've just bought my daughter a place, and they just prey on the young, these solicitors. They go, yeah. Now, is that garden your bit of the garden? Have you got? Can you?
Yeah, I remember that agreement. 30 years ago.
Yeah, agreement with the company, and you know, or it's
right of way.
Right of way searches and everything. Yeah. And you kind of go, you know, we're just shaking hands on this. So, and what ULS are doing is effectively, and then you got the added stress, right?
Yeah.
You've got the added stress of getting the money to the solicitor. Yes. Right. So in the old days, you know, you and I walk in and give them a check. Right. So first of all, the solicitor says to me, as it's a gift, the money's got to come from your daughter's account. So you've got to put the money in the account.
Yeah.
I went, yeah, okay. So the bank then bounced my check because my writing's slightly off. Right. And I go, what? And so I sort that out with the bank. And then I get into the solicitor saying, can your daughter make a bank transfer? And I said, no, she can't. She cannot make a bank transfer because I'll tell you what, because she's a geography teacher and I don't really want her transferring a substantial sum of money if I'm not there.
Yeah.
So what she's going to do is she's going to come to your office and she's going to give you a check for the deposit. And the woman went, you are joking, aren't you? I said, no. She said, that would take 5 days to clear. I said, I don't care. She's giving you a check. So the only 2 checks. So first of all, my daughter then has to order a checkbook.
Yeah.
So the only 2 checks she's ever written for the deposit on this house and 2 for the actual balance.
Yeah.
Never ever written. She'd probably never write a check again.
Yeah.
But, you know, so if ULS can take all that stress away of, you know, false accounts, etc., and stop people like me writing checks or her writing checks, that'd be brilliant. And hopefully that'll be end-to-end stuff.
Yeah, cut the time down and streamline it and simplify it. I mean, it'll just be massive, won't it? I mean, another one which is sort of like a turnaround or a couple of turnarounds has been Blancco data erasure and also EQLS. I mean, EQLS is a really interesting one, P2P payments as well. That I think as Ian Strafford Taylor, the CEO, seems to be now sort of really energized to get this one moving quickly.
Well, there's, you know, you look at something like Alpha Financial, which has done brilliantly well.
Yes, they're on about 9 times sales when I looked at it.
but they take all the proprietary risk. You know, they had to have a £20 million emergency funding because one of their clients wouldn't pay them back.
Yes.
So at least with equals, you know, it's all matched off. You know,
yes.
You're not going to get a sort of margin call.
Yeah.
And you know, he hasn't had the rating, but you know, that's life. You know, but he has got a bit between his teeth, and he's doing well. And Blancco, which
it went through a rough part, didn't it, about 3 years ago?
Terrible.
Yeah.
You know, it just had fake numbers.
Yeah, poor management, I think. And then they brought the guys in.
New guy came in, and data's amazing. I mean, it's quite interesting. One stock we've done, which is floating, musicMagpie.
Oh, you doing that musicMagpie? Oh, okay, yeah.
And musicMagpie, because data erasure is absolutely key for them.
Yeah.
And you know, you can just see as you get more and more devices, you know, you can drop it off into your musicMagpie sort of container at Asda and get your money for the phone or whatever, and then it's all erased with the sort of Blancco technology certificate and recycled, so it's good for the planet or whatever.
Yeah.
You know, or anything recyclable. You know, the thing that struck me when I was reading the Sunday papers was this thing called Depop, which I obviously thought was some sort of pop band from the 1980s.
Yeah.
But actually got a sort of 27 million followers. Right. I think that's the number worldwide. It's got sort of 7 million in the UK, just recycling old clothes. And you know, so anything that's recycling, I think is potentially interesting. I obviously never recycled anything because all my clothes get thrown away.
Yeah, and I think they're going to be with the new phones. The upgrade cycle for 5G is going to be enormous for their mobile side, and likewise, all the home electronics will eventually have to come back into iTads, won't it? So I'm sure that one's going to do pretty well. And then you've got, I just come into the final category. You've got quite a few really nice plays in terms of the reopening still. Things like, I mean, you've got Air Partner and Accrol, which are real traditional sort of hardcore value stocks that are sort of like doing, you know, potentially. Air Partner's still sort of recovered, just chartered airplanes and associated service. But Accrol's the tissue boys who went through a bit of a rough patch again about 4 years ago, and now got their act together.
Yeah, I mean, Accrol, we bought it afloat, and then it had massive accounting problems, which no one could see. Yeah. Refinanced it at lower levels. New management came in, and they've really sorted it out. Actually, bought this guy from DS Smith. And these boys team in. They made an acquisition the other day. You know, sort of wet wipes. You know, key thing for them is the currency, because you know, reals paper are priced in dollars.
Yeah. Okay.
So when the sterling was 120 against the dollar, it's pretty painful.
But now it's 140. 140
is a different game. Yeah. And actually, and people kind of people miss out actually on this, what this means for a lot of retailers. So if you're a retailer, currency at 140 is a big impact.
Yes.
Compared to 120 on your margin. So if you get the top line growing, I would expect to see most retailers having a bonanza time.
Yeah.
But going back to Accrol, you know, they've effectively taken a lot of the own label market, and they've been big with Aldi and Lidl. And I think they've got a pretty good runway actually. And
what's their USP? What's their USP? Softer bottom tissue or something, or what?
Well, you know, what's the USP is they're just more efficient and cheaper.
Economies of scale, because they've got about 20. Yeah, okay, they've got about a quarter of the market.
And also, you know, they're talking now about potentially buying their own mill, and so you then get vertically integrated, which makes it massive cost savings.
Yeah. What about Air Partner? Now, I know Lord Lee loves these guys, and he's been battering for those chaps for some time, and they're still around about 70p. They're massively undervalued, and I know it's an aviation sort of stuff, but
I don't know. Air Partner, it's one of those stocks, you know, you kind of look at, and we bought it really well, and it doubled, and then we sold some, and in fact, I think what we paid for it. And you kind of look at it and you think, it should be a lot more expensive than this. Is there something I don't know? And I've had a chat with them. You know, they've obviously benefited from the PPE last time, but, you know, private air transport's picking up. Yeah. They've moved into services in a much bigger way. And you like to think, well, actually, you know, there could be quite a lot of opportunity there.
But what about COVID testing at airports? I mean, these guys would be perfectly fit to add that to their product portfolio, because people are going to need flipping PCR testing every time they go abroad.
Well, yeah, that's true. But are people really going to rush out and travel? I mean, I know my kids have sort of, single-handedly tried to kickstart the pub trade in North London.
Followed by their father quickly in hot pursuit.
But I was in FI actually, which is obviously a bit disappointing. And you kind of look at it, you think, well, actually, are people going to rush on holiday?
They are next year when they can. I mean, I think like the straw poll that I've done, every single one is just desperate to get out. They'll be staycationing this year, but as soon as they get the doors open, they're out.
Yeah.
I mean, that plays to one of your others, which is WizzAir, I think, which is a sort of like a low-cost airline, which is
that's it. WizzAir is the only thing we hold. I mean, we sold all our jet too. We used to own 22% of stars, and we made a lot of money over the years in that. But I just think it's going to be a longer haul forgive the pun, for the airline industry.
Yeah, I think you're probably right. Yeah. What about the office reopening? I know you've got sort of CLS Holdings now. That's quite an interesting one because the pandemic has definitely changed that world. But they're sort of like only on about 2/3 of net asset values, and then you've got Granger, which is rental to young professionals in cities as they come back. And I know my daughters have headed. Now the lockdown's ended, they've headed back into Birmingham to party. So they're definitely heading towards the PRS and the build to rent type properties.
Yeah, it's quite tricky, isn't it? Hold on.
I've just lost your video, Andy.
No, it's all right. Someone was just calling my phone. That's all.
Oh, is it? Okay.
So it's quite interesting, this whole thing, because I look at my team, and normally it's just me and the grad in. I mean, the grads had like 1-to-1.
You've got a big office for 2 people.
Yeah, but on my desk. So the grads had she's had 1-to-1 tuition for like a year.
Yeah, I bet she loves that.
Yeah, it's been all my calls about people coming in for breakfast. It's been quite interesting. And I think most of my team might come back 2 or 3 days a week.
Yes.
And because actually, the commute is, once the initial euphoria of seeing people has worn off, commuting
is a pain.
3 hours a day. It's a pain. And you think, I don't mind doing that 2 days a week. But actually, I found when I went down to my place in Cornwall, I post myself all the results I haven't read over the previous sort of 6 months.
And they still remain unread.
No. I got down there and the postman said, oh, I thought you'd be coming down. Because suddenly there's no post and it's like a mountain of posts, And so, but it's quite good because I can just sit there and just flick through and look at numbers and just have a think of whatever. And I think a lot more people have discovered that. Actually, being in the office, while it's nice being around people, I don't really think full-time you're as productive as you think you were.
Yeah.
And so suddenly, I can sit down and read these numbers and then sort of look them up and go, actually, I think this is a really interesting situation. I need to have a call with the management. A bit like we did start of the pandemic, a bit like we did with ZAR. I read the results of ZAR and I said to my colleague Ian, we got to get in a call with these people.
Yeah.
And we bought, 27% of the company below net current assets, and they're up 500% in a year. Yeah. Now, if I was in the office, would I have found that? Yes, I'm not sure I would.
Yeah. No, I think most, other than people like maybe Goldman Sachs who are insisting, or Bank of America insisting everybody's an office culture type person, a merchant banker, then I think most sort of like offices are going back 3 days a week and giving people a bit of flexibility. Certainly the accountants are allowing that, aren't they?
Yeah. Well, I think Goldman Sachs only want their people back in the office so they can check they're working 95 hours a week.
Yeah, we had all those graduates sort of complaining, didn't we, of slave labour, albeit they're picking up sort of 100 grand. So how they could be sort of like calling themselves slave labour, I don't know. But one of the beauties I love speaking to you, Andy, is you come out with sort of like companies that I've always sort of like, never looked at. And in perception and reality is everything. Royal Mail. Now, I would have thought that wouldn't be in my basket of portfolio. However, what really surprised me when I was looking at the last trading update, their sales revenue increased by 14%. I was always expecting this is a letter business with a bit of parcel force, and therefore it's going to gradual decline. But these guys have gone gangbuster during the lockdown. I'm frankly amazed. So, what are your latest thoughts on the Royal Mail?
So what's very interesting about the Royal Mail? Because the guy who's running it, Swiss guy, Rico, he left.
Yeah.
And yeah, Maura Green was always afraid of his predecessor. Maura Green was always afraid of the unions. And I did point out to her, I did send her a copy of the Communication Workers Union report and accounts.
Yeah.
And I said, Maura, you know, this company, the union has got £11 million in cash and 81,000 members. So that's £90 strike pay each. Yes. How long do you really think that's going to last? Right. Anyway, so she left, this guy, and this new guy, Williams, has come in, and they just sort of transformed it, you know, so loads of transformation, and they benefited from the pandemic, and yeah, because the increase in parcels. And it's quite interesting when you look at Raw Mail, it floated about
£3 or £4, and then went to £5 or something.
3.30,
didn't it? Yeah.
Went into the FTSE 100 about £5 or £6.
Yeah. Fell
out of the FTSE 100 into the 250, got all the way down to £1.90 where we bought our stake, and here we are at £5.20, just about to go back into the FTSE 100.
And it's still only 11 times PE. I mean, I mean, if they can manage the unions and they can keep their costs down, yeah, it's definitely cheap. And
but all these internet plays, you know, Raw Mail, Wincanton, which I hold, Clipper Logistics, which I don't hold, DX, which I just bought 20 million shares in, following. Someone told me about it on Twitter. I thought, I haven't really looked at it. I'm going to have a look at it. Got the company in. Yeah.
You better follow that guy on Twitter then.
And so that was 300. They've just ordered another 300 vans today. And so, you know, those sort of internet themes are going to stay. You know, you look at Ready Northgate. You know, people go, white van's terrible business. Yeah. No, you can't buy a white van for love or money.
Yeah.
It's like the used car market. You know, Lookers came back at 40p a share. We bought a load of shares. Here we are at 67p because, you know, they were trading way below current asset value.
Yeah. No, I mean, I there's one stat which is great, which is from the ONS, and I got it here actually. And the internet sales, the percentage of total retail sales, you can see that sort of like, you know, trajectory upwards from about sort of like 2005, it was about 2%. And then gradually before the pandemic went up to 18% and is now double that at 36.3%, according to the ONS of retail sales. And I'm with you. I mean, once people have changed that habit, which they have, to order online, it's going to be permanent to a certain extent. They might be soften off a bit as people go out, but they're going to stay with it, aren't they? With the other one with Pendragon, I mean, again, it's sort of like your son, I understand, has been flogging cars on that you were telling me the last time on forecourt. So I mean,
he works.
They still go like hotcakes.
He just sent me a stat which I haven't opened yet. Just looking at the level of car sales, you know, for March, and you know, used cars, collector's items they're becoming because you know, new cars, you know, used car volumes are driven off new cars. So there's been less new cars, but this is a huge market. People go, car market. You go, hold on a minute, it's like 10 million, 9 million cars a year. I had a great call with Inchcape about 6 weeks ago, and the guy said, look, it's all about data. You know, if we own people's data now, and so we got something valuable.
Yeah, I mean, and Pendragon are only on at sort of like, you know, 10 times PE, aren't they? So
yeah, I mean, we started buying them at 7p. You know.
Yeah. Well, there you go. So just ending on one healthcare, which is a really cheap one, which came out of the trading update, Immunodiagnostics. Now, I'd had a good look at this a few years back. They do sort of vitamin D testing and sort of like, you know, that sort of like diagnostics for labs. And they've pivoted now to sort of automatic speciality diagnostics in autoimmune infectious diseases and COVID and all this sort of stuff. What's your view on that business? Because they're still cheap. They're only trading at about 1x sales.
Well, you know, they have had massive headwinds, right, between the switch from manual to automatic assays for vitamin D and the increasing competition for things like Diasorin and these other companies. So you look at it and you go,
there's a reason why it's cheap.
no, but they're coming out of it. And then people got very excited because they had a COVID assay, but then, like I say, they're 2 a penny. You know, like I say, we spoke before about Avacta, or we could have Synergen, or we could have Novocyte, you name it, right? There's all this space. but they've got a pretty low market cap. They've got cash in the bank, and they haven't been hyped out of audit systems. So, you know, they've got a large shareholder who's gradually transforming the business. So, yeah, no, I wouldn't put people off having a look. I think it's interesting down here.
Yeah. And where are you going to be putting your money going forward? Have you got any sort of like, is it more opportunistic? It's sort of like, there's a sort of, I think Warren Buffett says it's better to buy a great company at a fair price rather than a fair company at a great price.
Yeah. Well, like I say, we've done musicMagpie. Let's see how that sort of opens.
Good.
Yeah. So
what is the small cap IPO market like at the moment? I mean, it seems really healthy looking at the announcements. I mean, it seems to be plenty of money around.
Yeah, there's money coming into the sector, but there's been overall in the market, there's been 54 new issues, I think, of which 20 are underwater. Everyone assumes that they've all done well, but they haven't.
Oh, okay. All right.
Do you want to get the Spurs question out of the way now?
Yeah, go on. Ask about the Spurs.
Well, so basically, I was amazed that Spurs. I'm a Spurs fan, as you know. I was amazed that Spurs were invited to join the Europe Super League.
It was probably because they sacked Mourinho. That was one condition.
As one of my mates pointed out, it's a bit like Banana Man being asked to join the Avengers.
Talking about Supermen, one of your lads you mentioned last time was basically selling online food to gamers. I guess he's absolutely booming, I imagine, over the last 6 months.
Yeah, but it's not one of my lads, one of my lads' mates. But yeah,
again,
but that just goes to show, there's lots of opportunities out there. Just got to go and find them, haven't you? It's a bit like picking stocks.
Yeah, and then so like if investors want to put money into you promised you would give them your gilet last time for anybody. But so, given you're not wearing it, I'm guessing you've had a flood of people above £1 million.
No, I tell you, it's quite interesting on sort of Twitter. Yeah, people. This guy emailed me and just was talking about how he turned 10 grand into £1 million. So I said, he's thinking about whether he should get a job in fund management. So I did say that I had a Teams call with him.
Okay.
Just to talk about how he done it, because I was quite interested. And he probably not, 38 or whatever, probably missed the boat there. But it was quite interesting. There's a lot of smart people out there.
Yeah, there's a lot of good stuff. Yeah. Okay, well, thanks very much, Andy. Appreciate it, and look forward in touching base in 6 months' time. And big congrats on your portfolio. It's done terrifically. Thanks. All right,
cheers.
Thank you.
Cheers, Paul. Bye.